Welcome back, everyone, to NYU Grad's Daily Podcast. Today is Wednesday, January 24th, after hours and after the Tesla earnings call. So let's jump right in to what happened today. So, looking at breadth real quick, we had 970 new highs versus 142 new lows, which is well overbalanced to the upside. So that's healthy. On advancing shares, we had 41% advancing versus 54% declining. And the 50-day moving average, we had 34% of shares under its 50-day, which I think is like 1 percentage point more than yesterday, if memory serves me correct, and 36% of shares below its 200-day moving average. When I look at the complexion of the market, it was a mixed bag, to be quite honest with you. The Dow closed down about 100 points, 0.25%. It closed near the lows. So did all the other indices, NASDAQ, S&P, and the Russell. The NASDAQ, while green, it was up 55 points, or 0.36%. It was up quite a bit during the day, and basically what happened was after the lunch break hour, things started to sell off pretty hard. Same thing with the S&P. We closed in the green, but only up 3.95 points. So it was a mixed bag, to be quite honest with you. Looking at the heat map, I still think that it's a Magnificent Seven story. Tesla looks really bad, and we'll talk a little bit about that later. But Microsoft was up almost 1%. NVIDIA continues its climb higher at 2.5%. Google was up 1.1%. Meta was up 1.4%. Apple was down 0.35%. Amazon was up basically about 0.5%. But taking a look real quickly at Tesla, it had kind of an all over the place type day, intraday. We sold off really hard, then we rallied really hard till about 11:30. We went sideways till right about 1 o'clock, and then with the rest of the market sold off really hard, and Tesla reported earnings after the bell. And they're actually down after hours right now. Taking a look real quick at the real-time quote here. Last time I checked on my phone, Tesla was 195. Let me just log on to my trading account. Apologies, I'm just doing this live. Right now it is trading at 737, which obviously is closed, at about 195. So that last print was correct. Down 5.7% after the close. Now, I did listen to the earnings call, and we'll get into this a little bit later as I get more focused in on what happened today. I'm going to actually call today's podcast Bad Decisions. And just looking at in the afternoon, there was a good interview that I found that I'll share with you guys on the podcast notes, but I also shared it on Substack notes. There is a trader who used to work at JP Morgan, is now at his own fund. His name is Diego Paria. He used to be based in Spain. Then I believe right now he's in London, but that's beside the point. When it comes to frameworks, trading frameworks, the psychology of it, and also managing risk, he's a really good brain to tap. He has authored a book I'll share the link, but it's called The Anti-Bubbles, Opportunities Heading into Lehman Squared and Gold's Perfect Storm. So it's not, bestsellers list on Amazon or New York Times, uh, but it's a good read. And if you have the opportunity to watch this 50-minute interview, I highly recommend it. And I'm going to go off on a little bit of a tangent here, but he talks about the different stages of expertise in describing the framework of the trading mechanism, right? So I love how he breaks it down into, like, number one, there's the unconscious incompetence, when you don't know what you don't know and you're just making mistakes. That's like stage one. Stage two is conscious incompetence. You know what you know and you know what you don't know. And stage three is the conscious competence, where now you're kind of, you have experience, you're executing what you know, you have decent results. And then stage four is the unconscious competence, where you have a lot of your own internal AI built up from years of learning and experience. And I loved how he framed this up. And one of the takeaways from this interview that I really enjoyed, and it gives you kind of a inside peek into his early days of learning all of this framework. He was a trader at JP Morgan for commodities, and he had a sizable position in gold, and it was a position that was going against him. And with conviction, he told his manager he wanted to double down, and his boss said, "All right, I'm fine with it. I'll float you the the balance to do that, but before you do, I want you to close your position, like sell it, and then I want you to buy it back twice." So this is not just like 1,000 shares of GLD. We're talking 10,000 ounces of gold was the position. So he was already in. It was going against him. His manager said, sell 10,000 ounces of gold at the loss, and then when you buy back, buy it in two orders, your original size and then the double up size. And what he found was, after he sold, which was basically his manager was being his stop loss, he started to see that trade in a different light with fresh eyes, because he could have bought back in, doubled up his position, but he could also buy millions of other things with that capital. So my takeaway is never fall in love with the position, but also be very rigorous and diligent about your stop losses. Okay, you get stopped out. Yeah, there's going to be a cost associated with it, trades. You might just buy back in, right? And between you and I, we're not doing 10,000 ounces of gold. Our commission through Schwab or E-Trade is not that much. So if you get stopped out, big deal. Just get back in if the trade starts to go the direction your initial thesis was. There's a lot of gems. There's also to have a positive expectancy of each trade, have a trading plan for every trade. So I highly recommend the time invested. I think you'll take something away from it. And then just kind of broadening out the conversation, as I mentioned, just listening to the Tesla call, it's just an interesting take on a company that is on everyone's mind, right? Even if you don't own a Tesla, everyone knows about Tesla. Everyone knows about its leadership and Elon Musk. Whether you love him or hate him, there's no in between. And the call was fine, but I think there are concerns about margin issues in the future, and potential production delays for the Cybertruck, and what it really means to have this Optimus robot with AI. And toward the Q&A, Elon went expanded on his view that there is a pathway for Tesla to one day become the most valuable company in the world. He said it's going to be very difficult. It's not going to be easy. There'll be many obstacles. But he never has seen that pathway before, but now he does. But regardless, the stock sold off after the call, during the call, and we'll see what happens tomorrow. It's a very important name in Mag 7, but right now it is breaking down out of a wedge of its own. It's below the 50-day, it's below the 200-day, and I believe it's also breaking some Fibonacci levels. If it doesn't stop at 190 and it just keeps going, we're going to go to 160 before there's any level of real support to catch prices. So that's an important name. Keep in mind, Tesla is like 8 or 9% of ARK innovation funds. So that is going to probably move quite a bit depending where Tesla goes tomorrow on Thursday's open. What else did I want to cover? There's I told you earlier it was a very mixed bag on like winners and losers. So taking a look at what was strong today, it was energy, communication services. Again, that's like Meta and Google or Alphabet. Then you had technology and you have financial. On the downside, you had utilities, real estate, consumer defensive, healthcare, industrials, and basic materials are all red. So that's not that great either. So as you probably have heard, I mentioned yesterday, Netflix reported. They were up again today, really strong. Netflix is up 10.7%. Then you had ASML is a semiconductor company that I believe manufactures or helps manufacture chips. They were up 8.8% during the regular session. They reported after hours. I'm not sure where they're at now. A smaller company that I track called PaySafe, PSFE, they're up 5.5%. The VIX was up 4.7% today. I posted about it on Substack notes. I already had a position in volatility to the upside. I actually, this morning when it was red, I picked up more. I don't believe the VIX is going to zero. And I think whether you're buying calls or playing options or just investing or in the trade for the VIX, I think the risk reward is pretty good right now. You had please do your own homework. That's not financial advice. Then you had NVIDIA also up 2.5%. On the weak side, there are more than I thought would be around, but Carvana down 7.7, Wayfair down 5.25, Rivian down 4.3, VinFast Autos down 3.7, AI down 3.7, Affirm Holdings down 3.3, Roku down 3%. That's also a ARK Innovation Fund company. You had Barrick Gold down 2.8, Marathon Digital, which is Bitcoin miner, 2.8, DR Horton down 2.7, Wheaton Precious Metals down 2.7, PayPal down 2.7. PayPal apparently is going to shock the world tomorrow. Who knows what they're going to announce. Etsy down 2.7, CarMax down 2.5, Kinross Gold down 2.5, ARK Innovation down 2.3, Coinbase down 2.2, Beazer Homes down 2.3, GDXJ down 2.2, Pan American Silver down 2%. So that's kind of what was like the biggest red tickers on my watch list today. I would say, keep watching the Magnificent Seven. Right now it's the Magnificent Six. Tesla has pretty much bowed out of the race. Until Tesla captures its 200-day and retests its 50-day, the story is over. Let's see. What else did I want to cover? That's really it. Keep in mind, Next week, January 31st, is FOMC Fed rate decision. That is the most important thing right now for financial markets. It's a very binary cut or no cut world right now. So with that said, I'll see you all after the Thursday session. Have a great evening.